Well, we have with us Sridhar Sivaram, Investment Director at Enam Holdings. Sridhar, first of all, congratulations to you. The only person who warned us that insurance being treated as a savings product is something that is going to stop sooner or later. He warned us even last year before the budget. It didn't come in last year's budget. It has come. So many congratulations.
No, there's nothing to congratulate, Lata. It's just an observation that, the government had already indicated that they were plugging all loopholes as far as savings products which were tax-free. And I've been very bearish on insurance for a while for exactly this reason, that they don't sell protection. Only 10% of life insurance companies is individual protection. Rest, almost everything is actually some sort of a tax arbitrage product, which is a savings product. I mean, look at 7%, tax-free products for 30, 35 years. You can still buy it. You have another 2 months to buy it. Yeah. I mean, it looks so absurd that when you can't get any such product, these companies are allowed, products like this. It was, something waiting to happen. I mean, you didn't need, rocket science to, get to the bottom of this. Yeah. So I think the government has realized it and they plugged it. And I think it's a good move. That's my view.
But do they become valuable now? I mean, HDFC Life has seen a huge knock. I think it's like some 25% down from its recent high.
So Lata, my view is that, a large part of their growth was coming from selling these tax-free, easy products. I mean, it's easy to sell a 7% tax-free product to an HNI and go trying to sell an protection product that you pay 10 crores and you get nothing. It's a very tough sell. Yeah. But the day I see that protection is at least, or individual protection is at least 30-40% of their business, I would be keen to look at it. This is my view. I mean, obviously market has different views. Different people can take different views on this. My view is that unless protection is a large part, the savings products cannot take it's not a very profitable product. Like one of the commentator came yesterday and said the HNI product is not very profitable on your channel. So it is not profitable. How do you make 7% for 35 years with your costs attached to it? You need almost 8.5% product to break even. And it's a 35-year product. So you and me will not be around to see when this plays out. I mean, as I said, this is my view on life insurance. I've been a bear on insurance for a while.
ICICI Pru put out a statement that only 6% of their annualized premium equivalent APE comes from this over 5 lakh product. So do you think, therefore, at some point they become attractive?
Yeah, so it's possible, Lata, that different companies, so within that we'll have to look at it. The thing is that the growth aspect of insurance is
something you're doubting.
Yeah, is going to go. So now you'll have to look at them for a while as a non-growth stock. So is it fair to pay 3-4 times embedded value? That's a question that people who hold the stock will have to ask. I don't have to worry about those.
Okay, all right. Sridhar, good to hear your view. And as you said, Q4 could be a bumper, actually. For those that want to go ahead and buy it, then, this is the last chance. You've got just 2 months to go.
Yes.
But, besides insurance, the other big focus area has been the Adani Group stocks. And various commentators believe that there is some value emerging. But what's your sense? How is this, playing out first from a group perspective? And secondly, more importantly, from the market perspective? Because the market clearly has got shocked, by this. Go ahead.
So I don't want to comment on individual stocks and, groups. But on the systemic banking level, I don't see any issues. As far as this group or any of the other infra groups is concerned. I think the banks have learned their lessons from the past and have been very conservative as far as their lending is concerned. So I don't see any issue as far as the banking sector is concerned from the infra lending that has happened to this group or to any of the other groups. I think the banks have been very conservative. I think this is an overreaction right now.
So 1 minute, won't you fear? I'll tell you what I heard from the market yesterday. So I'm just posing that question to you. They have a lot of infrastructure projects, airports, Bombay Airport itself. And some of the banks have, promised or underwritten, committed to it. So will this be an overhang on banks? Banks were the pride. Everybody was into financials.
Yeah, Lata, so I'll not talk about, say, individual group. But if you look at airports in general, they are buzzing, they are booming. I mean, there are enough and more people who want to invest in airport infrastructure in India. They are very profitable business. So I don't see any issue as far as banks is concerned because they're collateralized with the cash flows of the underlying assets. So I don't see any issue as far as debt is concerned. equity is something which the markets have to, figure out. But the larger concern is what happens to debt, which is why the financials are probably selling off. But I think as the dust settles, people will realize that some of these are companies which have cash flows. And infra generally is 3:1 debt equity. I mean, you can't put 100% equity in a debt project.
So, Sridhar, would you buy the banks? Given the kind of selling that we have seen,
Definitely.
and if they're not really at
I
risk,
mean, there's no two ways. I mean, banks is one of
what's
our...
the preference there?
The top private sector and some of the larger PSU banks. We've been long on the PSU banks for a while. We think that even that looks very attractive given the fact that their credit cost continues to fall. In the private sector, we've already seen credit cost falling substantially. In PSUs, we are still, it's a work in progress. So as the credit cost falls, the profitability, as you've seen in the last quarter's numbers, that the profitability of some of the PSU banks have been up almost 50, 60, 70%, predominantly because of credit cost, not on the top line side. The top line will grow at maybe 10, 15%.
I mean, there we are already at a bit of a peak, right?
Yeah, so I don't see much of that.
Accelerate?
I think the only concern I'll add for financials is that currently there is a scramble for deposits. So if you actually see any newspaper, some of the largest ads are for deposits. I mean, 7%,
I'm sure NIMs
8%.
have peaked off because of that.
So that is one of the concern. I'm just highlighting the concern that it's not as if financials, everything is hunky-dory. There are issues, but I think this could be transitory because we have a large bank which is getting into a merger and 5 lakh crores of incremental deposit which they have to garner. So that's a stress on the system, and loan growth has been faster than deposit growth if you see the last 2 quarters. So everybody has been playing on the buffer they already had. I think that buffer is ending. So now there will be a scramble for deposit. Deposits did not keep pace with lending hikes.
Got it, Sridhar.
So now that will happen.
Go away from financials.
Just 1 minute. I just want to point out that there is massive volatility on the Adani names.
Stocks.
I mean, so, the circuits, there were Adani Ports, for example, is off the circuit, but, there is increment, every time it comes up, and we lost, it came up almost 5%, Ports, and then it sold off again. Twice over this has happened. So the margin there seems to be some attempt to buy the dip, but there is also incremental selling which is coming in. So it's not like, there have been 2 attempts, 5% recoveries which have been sold into. So this is not one way in that sense. But we'll see. Ambuja also came back into the green twice over, and now it's down about 2 3/4 again.
Prashant, just 1 point. ITC has hit a lifetime high, I think so.
I see.
It's in today's trading session, 370, I think it went to. And ITC, even yesterday, the market was a little bit wobbly after that knee-jerk reaction. The fine print told you actually that the increase of taxes was not
lesser.
as much.
Yeah.
And in fact, as we speak, it's made the high point of the day. So those memes for the last couple of years, they've been put to rest, I think. So
No, the new memes are about...
Yeah, the new ones.
the new ones continue.
The old ones are behind them, and
history.
they've had the best last 12 months. ITC out of nowhere. The big outperformer, yesterday and today as well, talking about volatility, stock is up 10%.
IDFC is the other one which is gaining the most. It's up 4%. I think there is a dividend which is comes
dividend
through.
as well as investment.
That's 88 odd. What else, Sridhar, are you liking in the market? Because, I mean, when this kind of indiscriminate kind of selling happens, it throws up opportunities, right?
And also, isn't the budget a consumption booster? Because, I mean, there's little more money left in terms of disposable income because of the tax cuts and some
from the budget
spending.
standpoint, I mean, Lata, we've discussed this many years that generally we are always skeptical of the numbers. For the last 2 years, I think you generally feel that the numbers are very conservative. I mean, really can't complain much. And I think what I like most is the fact that despite all the challenges, they've increased the capex number from 7.5 lakhs to 10 lakhs. And to be fair, even I was skeptical at 7.5 lakhs that will they be able to actually spend that money? And I think we have to congratulate them that they've almost done 97%, or they expect to do 97% of that number. So I think I'm reasonably sure that they will be able to. I travel a lot, and I think I see construction work almost everywhere. I mean, and going at great speed. So I think when they're saying 10 lakhs, I'm sure they have a lot of projects which are already in the pipeline. And that, I think, gives a larger booster than the consumption booster. Because the consumption, it helps you in terms of, the money multiplier only for 1 year. An infrastructure project can help you for a much longer period. So I think the quality of the numbers is something that I'm very happy about.
So what does it lead you in terms of stock picking is what I want to know.
So, Lata, infra companies are difficult to buy. I mean, corporate governance is an issue, size is an issue. So I think the easier way to play is the financials. Finally, somebody has to fund some of these projects. So financials is a way, or ancillaries, or commodities, which is cement or some of the other things that go into infra projects. Directly infra, you have to really, look at deep into these companies to really ensure that you're not heading into a black hole. Okay, so that's how I will put it.
By the way, the market has recovered 100 points from the low.
And the mid caps in particular.
Yeah, the Nifty has come up very nicely. It's at 17,556 or so. Bank Nifty has also come up quite a nice. It's a green candle, which means we're off the opening levels by a very large margin. Sridhar, you spoke about IT already, or
no? I haven't spoken about IT.
Any views? Because the Nasdaq is rallying in a very powerful way.
Yeah, so I would still wait to go decisively very long on IT. I would want to wait and see how the guidance for the next year emerges. Generally, what we've seen is that when US and Europe enter into a slow growth or a recession, the discretionary spendings normally come off very sharply. And
what if, like Europe, everyone got Europe wrong because of the weather? No one could see it coming. I mean, in the US also, it's not as bad. I mean, it's okay. I mean,
there seems to be a view it'll be a
if it
mild
turns,
recession.
then everything changes,
possible.
right?
Yeah. So the question is, what are you paying for it? Are they going to grow at say 15, 18%, or are they growing at 10 or 12%? So there's a big difference in terms of what you pay for these companies. So I think at this stage, I would still be underweight IT. And wait for some more clear signals, because there are enough other opportunities available right now.
Yeah.
I would prefer to play a domestic story right now, because what has happened in the budget and the consumption push, there's a lot more opportunities as far as the domestic story
Only
is
thing is for domestic, engineering companies, I mean, I hear a lot, valuations are rich, right? I mean, pick up Siemens, for example.
Yeah.
I'm just talking about that because I looked at numbers, what the 10-year average P multiple was, and pre-COVID where it was, where it is now, huge expansion. And it's not as if numbers have changed, turned around.
I would say there are a lot of other companies available.
Smaller.
In the smaller space, there are companies available, especially some of them in the defense space, which are at much lower valuation and have very good visibility on growth. Maybe some in the consumer durable manufacturing space. So there is opportunity available.
In defense, someone was saying that there was a little bit of disappointment because it's not the capex has not increased that much. Any thoughts? Have you looked at the numbers?
Yeah, so I've looked at the numbers. I mean, defense has been roughly flat for 3-4 years. So it's not like the defense expenditure has been rocketing through like what has happened in the capex number. But having said that, some of the defense companies that we are looking at is more on the offset play, because then the customer is not the Indian government. It's actually some of the MNCs. So to that extent, your cash flows are more secure because there's always a delay in payment when it comes to government companies. So there are plays available in the manufacturing, in the capex.
Sorry, offset plays, can you give us an example? Purely as an example. What do you mean?
No, so offset basically is companies, so India is pushing on offset. Basically, your 30% of your production has to be made in India. So if you're an MNC in Israel or in the US, and if you're supplying defense equipments to the Indian government, 30% of what you sell has to be manufactured in India. So in the last 3-4 years, there have been large companies who have come up who do exactly this, which is basically do the 30% for the MNC.
And so are you referring to the Bharat Forge or HAL or what?
Yeah, some of them. I don't want to name companies, Lata, but people can easily do their research on this. But there are very exciting, interesting companies who do only offset work for MNCs.
Okay.
Yes.
The other thing, the other sector I want to ask you, real estate. It was seen as the start of a good cycle for real estate. But now the budget has a slight negative for luxury housing.
Yes.
Your capital gains can't be invested beyond 10 crore in homes. Is there
so that is a negative.
Here?
I think the larger negative is the interest rates itself. As the interest rates continue to go up, there is the affordability index.
But the deficit is lower than expected, or rather the borrowing. So actually, the yields have fallen by about 15 basis points.
We'll have to see how this plays out over the next 6 months. So if you go back, say 6 months back, your home loans were available at 7%. Today it's already at 8.5%. So the mortgage 1.5% differential is huge. But I still believe that there is a play in real estate. I'm not saying that it's not a good play. There is a play in real estate, and there are a number of good companies available now on real estate.
All right, Sridhar, before I let you go, you have two fans at home as well, my mom and my sister, after the point you made on gold and how, the lady fund managers at home, they are the best. But, just to take that gold point forward, and you made a good point about gold returns as well. Is there another way of playing gold? I mean, to buy the stock market, whether it's some of these gold financiers, or we had the management of CSB who has 47% of their mix, or just stay to the vanilla gold.
Simple.
Buy jewelry.
No, my view is buy the government sovereign bond, because it gives you 2.5% extra. I think my point is that people underestimate that gold is a hedge against the currency.
Yes.
So you miss the point, and most people and fund managers who argue with me miss this point because they keep showing me the dollar return of gold. And I tell them, listen, please, I mean, being a fund manager, you have to compare apples with apples.
Yeah.
So the rupee gold has significantly outperformed many of the time periods, the index also.
Yeah.
Or in some cases, it has matched the index. And my point is that it is as close as possible to the Nifty or to the Sensex over 10 years, 15 years, 20 years. It's an asset allocation call. And my point is that Indian women, despite all the negatives that people have spoken about gold, has continued to buy the gold. Whether they buy as jewelry or not, effectively it becomes a utility, because if you see the gold loan business today is 4 lakh crores or more. So it is not just lying inside the cupboard. There is an economic value which is getting generated out of that.
Indian women and Indian men also. No?
Prashant,
I wanted to say that.
You can say men, but
I wanted to say that it was my father who invested in gold.
But I think predominantly, I think the women have done better. So I'll give credit to the Indian women.
Prashant
for buying
and me are
gold.
falling in line with that. Prashant.
We have to thank you on
Is
that
there
note.
a choice?
No.
All right, Sridhar, thank you very much for joining us. Great to have you with us here, and thank you for coming to the studios. Well, the